let's be honest here, man. Trading is very hard. Or is it really? Well, not if you actually have a proven system and a step-by-step process that can literally walk you from identifying the actual opportunity to the entry and also to the exit. Then trading really isn't as hard as most people make it seem. And in today's video, that's exactly what I'm gonna break down to you guys today. I'm gonna go ahead and walk you guys through a 5-step process that will allow you to do exactly what I just mentioned, so that trading doesn't have to be as complicated as most people make it seem, at least from a technical perspective. Because there are reasons why trading could be a lot more difficult than just technical, and that has to do with more so your mindset or lack of ability of controlling your mind and your emotions. But from a technical perspective, if you guys follow this 5-step process, I can almost guarantee you'll start to see a lot more consistency in your trading results. Now, enough of the blabbing. Let's go ahead and get right into this. All right, guys, let's go ahead and break down the bread and butter trading model. This is what I like to call it because it is the trading model, guys, that has worked the best for me. It's the one that I've now been using for a couple years, and it truly has changed the game on what I look for every single day when I approach the markets, you know, and again, it just made things a lot easier for me to identify because it is a step-by-step process that I have to follow now in order for me to actually be able to pull the trigger. Now, some of you guys are probably going to be familiar with it because it is a variation of one of ICT's trading models, leveraging things like fair value gaps and expansions. We use a lot of similar terminology because, again, I didn't learn directly from him, but I learned a lot of the concepts that he definitely did, you know, put out into the marketplace, right? So if all you guys are going to say, oh, that's ICT's, I understand it. I call it bread and butter because it's what works best for me. Okay, so I just wanted to term it that. All right, now let's go ahead and get into this, guys. Now, again, there's a few things that I like to look for when it comes to looking at the bread and butter trading model. The first thing, guys, that we need to identify is, was there a sweep of liquidity based on either the Asian session high or low or the previous day high or low? Typically, if we're going to be looking for a continuation of a trend, then we usually want to see a sweep of the Asian session high and low, and we want to see the previous day high and low be respected ultimately because we see continuations. Now, there are times, guys, where we do have massive moves in the market that does take out both Asian session high or low and previous day higher lows, and then the market still continues. In the example that I have here on the screen with these graphics, that is actually an example of that because of news. News was just so aggressively bearish that day that it did take out both previous day low and Asian session low. But more times than not, guys, if there's not crazy news on the horizon, previous day low or high should be respected, and we should just see a sweep of the Asian session low or high for the market to then continue in that direction. But that is the number one thing that I gotta look for, guys. If we have been ranging the entire night throughout London into New York, but yet Asian session high or low still hasn't been swept, then that is going to be my initial thought of what I think the market is going to do on the open. We're probably going to go ahead and target the lows for Asian session and then eventually find that demand to send us back up to continue, say, a bullish trend. Now, if we're bearish, it's the inverse. Now, if the market has been trending all throughout London session into New York and we're expecting a bearish day, then yeah, we would expect a sweep of the high and then the market ultimately go ahead and start to sell off. Now, trading the NASDAQ, which is what I primarily trade, guys, is the NASDAQ, trade the NQ futures. I'm more times than not going to be looking for bullish plays here just because in theory, the NASDAQ typically is a very bullish asset. But there are examples where there are shorting opportunities, and I'll actually show you guys an example of that, you know, later on of today. You know, in today's trading day, I had a phenomenal day, and it was me trading a shorting opportunity because that's what I felt like the market was going to do, right? So I'll break that down as well. But the first thing I typically like to do, guys, is make sure that there's a sweep of Asian session high, Asian session low, and sometimes we'll get a bigger sweep of previous day high and low as well. Once we are able to get that sweep, no matter if it happens in London session or if it waits to New York session to happen, now we can go into the next step. Was there an expansion move on the 5, 15 minute, 30 minute, maybe even 1 hour time frame you'll have to wait for? Was there an expansion move? Now, when I classify as an expansion, guys, is when you have a series of consecutive candles going in the same direction. So if I'm looking at it on the 5-minute time frame, I want to see 2, 3, 4, 5-minute candles actually showing strength, actually showing fair value gaps, going in one direction or the other. That is showing me that momentum is shifted or is starting to go to continue in the actual direction that we're looking at. So that's what I characterize as expansion. Okay, so after we get the sweep of the Asian session high or low, we typically want to see an expansion going in one way or the other after the actual sweep itself. Now, once we actually get that expansion move, confirming that the market is actually going ahead and going into the trend, then we want to see the market retest back into a fair value gap or a breaker block. Now, again, a fair value gap, I'll show you guys because that's exactly what we're looking at here on this example right here. But on the live example that we took today, it was actually taking a retest of an actual breaker block, or necessarily not just taking it off of the breaker block, but the reaction that we got from the breaker block. is what kind of helped me identify my entry, still using the similar model that we have here. So I either need to see a retest back into a fair value gap or a retest into a breaker block. And then once we actually identify the retest, then we go to the 1 minute time frame, and this is the only time I go to the 1 minute time frame, and that's just to help identify my entry by looking for an iFVG, inverted fair value gap. That is confirming for me that the market is getting ready to go, and that's when we typically take our entry. Now, when it comes to our targets, guys, we want to just target the next or the previous day's high or low. So if I'm looking for a sell, I'm targeting the previous day's low. If I'm looking for a buy, I'm targeting the previous day's high. We get in, we get out, and we call it a freaking day. So let's go a little bit more in depth now into this, now that I broke that down. So looking at this example, guys, that I took last week, this was a trade that actually kind of was expansive, the sell-off that we have here, because it was driven by news. So we actually seen the Asian session and the previous day low completely get ran out. And what I was looking for, though, was still bullishness. Even though we had a crazy sell-off, I was still very bullish here on this market for the NASDAQ. So I wanted to see the market rebound. So once we took out previous day's low, I figured that there was going to be a lot of bullish liquidity, or a lot of liquidity that was going to get captured out here. And then at that point, we can go ahead and get right back above previous day's low, but ultimately target even previous day's high once again. Okay, so that's what we were looking for. This is a 1 hour time frame, right? The sweep on the 1 hour time frame. That is what we're looking at right there. Now, in order to identify the expansion move here, right here, we're looking at it on the 15 minute. And the reason why I looked at it here on the 15 minute, I kind of should have probably added the 5 minute. I do have the 5 minute expansion right here as well, but we're looking at it in the 15 minute time frame. And that's when the market finally found its support down here at these lows. We had this very significant 15 minute candle that ends up creating the fair value gap. Now, what is the fair value gap? Well, the fair value gap was created, guys, when the high of this first candle, this white one, all right, so we have this high right here of this one candle, then we have the third candle, the low of it, right? So the high of the first candle, the low of the third candle, and then we have the massively big candle in the middle, right? It is a 3 candlestick pattern when we're talking about fair value gaps. So we have the high, we have the low, and what did the market do? The market is going to go back in that fair value gap, and that's where we typically find demand to go ahead and start to look for our entry. So we highlighted the 15 minute expansion. Also, if you want to look at it from the 5 minute, like I said, remember, expansions are classified by multiple candlesticks going in the same direction. We have 1, 2, 3, 4, 5 5 minute candles that are all very bullish, going in the same exact direction to the upside. We also did get a minor break of structure closing above these levels. So that to me is classification of expansion when we're looking at this. Okay, so we did have an expansion move here. Now, the next thing that we did was a retest of the fair value gap, or a breaker. For this example, we had a retest of the fair value gap, and we also had a retest of the breaker. Now, a breaker, guys, a breaker block to me is going to be the high that puts in the low of a significant move that sweeps structure. So this entire sequence right here, right, which this is about 4 or 5 candles, this entire sell-off right here is what I would consider a breaker block, all right, or a series of breaker blocks that we can leverage and utilize as areas to also react from. But just to keep it simple, we have the fair value gap right here, right, that the market tapped into. The market came all the way back down, retested the breaker block, and then all we're looking for, guys, is for that next thing, which is the entry on the 1 minute, which is looking for that iFVG on the 1 minute time frame. Now, before we even get into that, guys, we also even had a 1 minute iFVG here on the 5 minute. Okay, so if we're looking at the iFVG for an entry on the 5 minute, this is also a very, very good example of that. Again, we have this sell-off right here, right, that creates the gap. The next candle ends up engulfing that. So right here's the engulfing. That could have been entry as well on the 5 minute time frame using that same exact criteria. But even if you go down the lower time frame, guys, now we're here at the last step when it comes to identifying the play. We have the actual right there, the inversion of it, right? So we have this 3 candlestick sequence right here. Okay, we have the candle 1, candle 2, the big one, and then candle 3, that last one, and the gap in between that was right here. And once the market closes above that, which is this candlestick right there, that is the entry all day long. So for this trade idea, guys, I took this, and we actually, not just myself, but me and my community, and we ate lovely off of this play just because we waited for all those confirmations. We didn't just take it blindly. No, we had everything that we were looking for, right? We had the sweep of previous day's low. We had the expansion move back above the range, or back in the range, which is the previous day low. But we had a pretty significant candle there that created the fair value gap. You can see it again here on the 5 minute time frame. All we waited now was for price to come back into the fair value gap right here, right? So the expansion creates the gap. The retest is now us trading back into it. And then all we did was, once we're in it, we waited for that inversion play, which is right there. And that was our entry all day long with stops below the low. Now, where do we target? Back up to previous day's high. Okay, now again, because this was dragged out due to news, this was a very significant significant move back up to the highs, but it did happen. It played out, and the market eventually did smack, previous day high. It took a little while, but it did eventually do it, and pretty much that is the end of the actual trade. Now, let me go and show you guys an example of what happened today, right? Today was a very similar, following the same exact process, but today, instead of me playing a retest of a fair value gap, which is typically like step number 3, I played the breaker block instead. Let me show you guys that right now. So before the market even opened up, guys, I was very bearish today just because I was looking at what has happened the previous day. We had a super significant bearish candle here that happened on Friday, that not only just because it's a super strong candle, but it also inverted a daily fair value gap. Okay, so at one point, guys, this gap, this candlestick, the second one and the third, creates that gap in the middle. I was actually looking for longs on Friday off of that gap to continue bullish, but the market was like, nope, not today. We're going to be super bearish, and we ended up inverting that gap, which to me tells me that we have a lot of selling pressure here, and we probably could continue to look lower. At the very least, we can take out the previous day's low that actually created this massive candle that actually inverted the gap. So now if we come back towards today and what happened right before the open here, let me go ahead and just use the replay tool and erase all this, right? So right before the open, guys, this is how the market ended up looking. We had that previous day's low still untested, untapped. Again, remember, because we actually had a lot of selling pressure to close out the week last week, we inverted that daily, that daily FVG. There was no way in hell I did not expect us to go ahead and run these lows. Like, I expected it, right? I figured more times than not, we're probably going to take out these lows, at the very least these lows, and then possibly go ahead and target more sell side liquidity below here, right? But my initial thought was, okay, we can look for possible shorts today and target back down to previous day's low. Now, what really had me interested, guys, is when we look at this now from the 15-minute time frame, we're starting to see the market really start to displace. We have this 15-minute engulfing candle, right, that actually happened off of a retest of the Asian session highs. Now, keep in mind, we already swept Asian session high, which is step number 1. This happened during London session. We rejected off of the moving average. We had another test back up to Asian session. We actually rejected off of that once again, closing back below the moving average right here, right before the open. We had another strong 15-minute candle. So now we're really starting to displace here to the downside. If we go to the 5-minute time frame, guys, you guys can really start to see, the consecutive 5-minute candles start to add up, right? We had strong, we did have a little pause here because we retested the moving average, but then we had, more. So again, this to me is really showing, guys, displacement to the downside, reacting off of the retest of the Asian session high and the 50-period moving average on the 15-minute time frame. What do I do now? Now, I want to continue to wait. Why? Because next candle comes in is the actual market open. If we look at this on the market open, guys, what happened? Initially, we actually spiked up on the open, but then the market actually ends up closing bearish. That is very good news for me and my bias, because again, I was already coming into the market leaning towards bearishness because of what the previous day's candle actually did. So us rejecting like this on the 5-minute on the open tells me a lot. Now, if we actually go to a lower time frame and we go to the 1-minute time frame, guys, look what we have here, right? Again, this is all happening on the open. We had the initial spike up on the open, then we had the immediate rejection. But if you look at this right here, this is another fair value gap that was created on the open. If we were truly going to be bullish, we shouldn't have closed back below this fair value gap. We should have just continued to drive with this type of momentum, but we didn't. We actually had these two strong candles on the open on the 1 minute, but then we had this massive bearish candle that came 3 minutes after the open that inverts the fair value gap. That was my entry all day long, okay? Because I'm already seeing it on the 15-minute time frame, the market showing its sands. On the 1-minute time frame, once we get this fair value gap, I'm in this all day long. Stops were a little bit higher because I wanted to make sure I respect the high of the candle. And then obviously we go ahead and we target previous day's low, but ultimately we try to ride it out for as long as possible. So this was the actual setup that we took today. And if you look at what actually happened, guys, I mean, this thing just starts to absolutely collapse here, right? Let me go ahead and speed it up real quick, right? It just really starts to collapse because now we are starting to respect order flow of what's happening. This thing just really went crazy. Now, pretty much this is where we're almost at for today. So very beautiful setup, guys, that we took here. Literally happened today. And just so you guys can see this, again, I'll show you guys on the combine that I've worked on. If you look at this, guys, and you look at the actual timestamp, this is the actual trade right here that really netted me, the most of my profits, because this is like the main one that I actually set it up at. Look at the actual time where we exited. We exited at 9:54. We entered at 9:33, right? So we were really in this position for almost 10, 15, 20 minutes. Our entry point was at 21,741. Where's our entry right here? 7,000 or 21,741. So our entry was really right here. Like I told you guys on the close of that, the inversion, we actually took the entry. And then, yeah, we were able to go ahead and ride it out to previous day's low. Now, I also left a little bit of a runner to actually ride as well. But, we ended up targeting previous day's low and, we made our money and we got out at 21,622, which is again a little bit lower below previous day low, right? So ultimately, guys, it was a phenomenal trade. This ended up being around a 3-to-1 risk reward on this position. That's just an example, guys, of the bread and butter model in real time. So this was an example from last week, and obviously now I just showed you guys an example of how we took advantage of one this week using same exact steps. The only difference between this one and the other one is one waited for a retest back into a fair value gap. The other one waited for a retest of the actual breaker. And just so you guys can see where the actual breaker was, I don't think I actually told you guys where it was. The actual breaker was this last push up before the market actually started to shift, right? We had the test of the breaker, we reacted immediately off of that, and that was my entry all day long. So if you guys enjoyed this style of video, guys, please let me know in the comments. I really want to go ahead and just start to really show you guys exactly my trading models that I personally utilize to help you guys out in your guys' journey. Family, I appreciate you guys. I love y'all, and I'll see you guys in the next video.